Dan, did it scare you a little bit? I've read your notes. Did it really scare you a little bit last week to see what happened with Alphabet and Tesla and their results?
I mean, Dom, it didn't, because if I look at the underlying AI growth in the cloud, specifically from Alphabet, that's bullish. And where's Tesla going to be spending? It's going to be on incremental AI. Look, I think it's going to be a big week for tech earnings. I mean, when you look at Amazon, Microsoft, Apple, Meta, this AI revolution, I think, is just starting. And that's why I continue to look at it as a get the popcorn out moment in terms of this tech bull market. This sell-off, I view it as a bump in the road, not the end.
In a whirlwind of market activity, Nvidia has captured headlines with its dramatic twists and turns, becoming the centerpiece of the tech stock saga. As the company recently executed a 10-for-1 stock split, its valuation hit unprecedented heights, only to reveal a subsequent drop that has investors holding their breath. Nvidia isn't just another participant in the booming AI sector, it is leading the charge. With its strategic advancements and dizzying growth, Nvidia has been a primary catalyst in propelling the artificial intelligence revolution. The narrative surrounding the company's stocks has sparked a mixture of exhilaration and caution among investors. But what exactly does this mean for Nvidia, and more importantly, for those contemplating a stake in its future? In exploring this intriguing tale, the article will unravel Nvidia's monumental breakthroughs and how they position the company in an ever-competitive market, despite the recent fall in stock price. Importantly, it will examine whether this is the right time to buy the dip. Buckle up as the story of Nvidia's market roller coaster unfolds against the backdrop of the AI revolution. So let's get into the details. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Oh, you mentioned us potentially being in the fourth inning here of some of the AI kind of landscape and this next iteration, we should say, of AI, because it is a kind of decades-long journey that we've had just to get here. But all these things considered, we've heard a lot from companies like Nvidia about a future where there is a 1 million chip data center. For Nvidia, what more do you need to hear from them when they report this earnings season about how close we could be to eventually seeing that? When are we going to see, from your estimation, these 1 million chip data centers?
That's a tough question to answer. That's tough to tell. So unfortunately, at times improvements and/or innovation and technology suddenly skyrocket, and at times, we basically feel satisfied with what we have, and we continue to utilize that. So it really remains to be seen. It could be 5 years, it could be 10 years. I can't really answer that question. But in terms of NVIDIA, though, I think they've done a pretty good job by basically having that full stack of products, right? Having that full stack of offering around their GPUs. Because some of the main issues that we're facing overall when it comes to the AI cycle, for example, is power, is electricity. I mean, those data centers need to be run 24/7, especially when you're talking about the training side of it. So the question is, can those chips operate a little bit more efficiently? How can you allocate, again, more efficiently power to, at certain times to certain parts of the servers and the data centers to certain tasks. And what's good about NVIDIA is it does provide the software that can help do that. So that's just one example of that full stack that it provides. So, given their current leadership, of course, the first mover, and they've got a dominant market share, it seems that all of that full stack may create a switching cost for those guys. And that's a pretty good moat, pretty good competitive advantage to have. So I think they're still actually very well positioned in this entire AI cycle that we're experiencing right now.
One could say the stock market is the world's most high-tech casino. But instead of a poker face, Nvidia's recent 10-for-1 stock split followed by a notable decline surely made some investors wince. After climbing the peaks of a 200% market cap increase and joining the $3 trillion club, an elite circle including only 2 other members, Nvidia's stock saw a 20% drop from its June highs. For anyone keeping score, this sudden twist resembles a Shakespearean drama, minus the iambic pentameter. Yet, Nvidia's narrative isn't just one of numbers but of profound technological impact. With data centers generating 85% of its first quarter revenue and reaching a staggering 427% year-over-year growth, Nvidia stands out not as the AI wave surfer, but its primary force. Generative AI, a buzzword turned investment behemoth, has found its true champion in Nvidia, and the company has revealed an eye-popping $1 trillion opportunity within this cutting-edge domain. Tweets from industry analysts have echoed the sentiment, pointing out Nvidia's transformative role in data processing and AI deployment. One tech analyst has even said that Nvidia's not dipping, it's deep diving into the trillion-dollar AI pool. Watch out, world. This speaks volumes about how the company's ingenuity extends beyond mere market cap and touches upon its concrete contributions to AI advancements. From AI-driven data centers to autonomous machines and gaming, Nvidia showcases what happens when innovation meets execution. And what about the Blackwell platform? Let's find out. Hello, everyone, and welcome back to Investocracy.
Investors right now who've been tracking the ticker symbol NVDA, they're also seeing in the second half of 2024, Nvidia shares down right now by a little bit more than 10%. All that considered, what would you say to those who are looking to try and figure out what a viable entry point is to Nvidia, even at this juncture?
Yeah, it's tough. It's declined a little bit. It's given back. I mean, there is some sense that there is some rotation into the SMIDs, or I should say, small mid caps. As we've seen, Russell 2000 perform pretty well. But in terms of our valuation, we value it at currently at around, between 140, 150. So I would say probably some additional downside may be needed for new investors to come in. But for investors that are in the name right now, I think it's better to remain with the leader in the market, in the AI market, and that's benefiting from all fronts when it comes to AI development, and AI growth. So that's my view on Nvidia.
Ali Morgherabi, who is the senior equity analyst over at West End Capital Management. Hey, great to have you here with us this morning, and thanks so much for the timely insights and analysis. Appreciate it.
Enthusiasts in tech circles are buzzing about its full-scale production promise, gearing up to power generative AI complexities at a trillion-parameter scale, a feat of monumental proportion. Analysts even believe that Blackwell isn't just a platform. It's Nvidia's ticket to AI supremacy. However, despite these significant strides, there are palpable concerns regarding Nvidia's earnings. Is it excessively reliant on hyperscalers? Will its meteoric rise face the same demise as Intel during the dot-com bubble crash when the latter's net income plummeted by 80%? To be sure, Nvidia's earnings have shown impressive resilience. In the last 12 quarters, only 16.7% dipped below 2% growth, a testament to its capacity to weather market fluctuations. The number of positive surprises in earnings further bolsters the argument for Nvidia's solidity, mirroring Intel's golden years before the tech bubble burst. Despite a current 20% setback from its 52-week high, Nvidia's valuation metrics don't scream red flags, quite the opposite. At 41.2 times forward non-GAAP earnings, its lofty valuation isn't as exaggerated when one digs deeper. A more nuanced metric, such as the forward price-earnings growth, PEG ratio, shows Nvidia trading at just 0.8 times earnings growth, trailing its 5-year average by 55%. It translates to a suggested price of $253 per share based on historical norms. Investment firms are not just speculative. With 38 Wall Street analysts upping their forecasts, the future does seem robust. So, is Nvidia a smart buy in the downturn? Wall Street consensus projection shows a dizzying 20.3% upside from current prices, implying that despite its stock falling 11% this past month alone, Nvidia retains ample room for upward momentum. If you've noticed the tech giant shining in the AI sector, With Blackwell's impending contributions and augmented AI infrastructure, currently, Nvidia's stock screams, buy the dip more than ever. So the question here is, what's most likely to be next for the stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Well, he is known for betting against the housing market before the '08 financial crisis. We continue our Big Short Week special with a CNBC exclusive interview. Steve Eisman is Senior Portfolio Manager at Neuberger Berman. He joins us now. Welcome back, Steve. Always good to see you.
Thank you.
You weren't surprised by this sell-off that we saw yesterday's session?
You think I wasn't surprised? I was. Who are you talking to? I was surprised.
You were surprised.
Yes.
You didn't think that this rotation was sort of.
Look, rotations
are
are always violent. They always catch everybody unawares, and it's not a fundamental correction. It's like a psychological rotation. People all of a sudden woke up to the fact, like, I want to own something else for a while.
Do you think that
I never can anticipate those things.
Right. Do you think the psychological rotation, though, is something that will hold? Is this something worth investing around, this change in psyche?
I don't trade. I just don't trade. I'm not particularly good at it. God bless people who are. I just like to hold stocks for a long time. So I don't think fundamentals have really changed all that much. I mean, the only negative data point I would point to is consumer spending seems to have slowed a little bit on the margin, and delinquencies are up a touch, but nothing. And probably the economy has slowed a little bit, but I don't particularly find any of that alarming.
As the dust settles, Nvidia embodies a saga filled with unprecedented highs and cautious optimism from market dips. What goes up must come down, momentarily in this case. But the company's critical advancements in AI and data centers ensure its commanding stance remains unchallenged. From a net income of nearly $30 billion last year, a 581% increase showcases its robust potential and positions Nvidia as a formidable player, mentor, and disruptor in tech. The stock, despite facing a downturn, aligns closely with the AI sector's maturing phase, where substance overtakes initial hype. The $1 trillion AI opportunities, complemented by Blackwell's launch, make Nvidia's future brighter even under skeptical scrutiny. And some analysts even went as far as predicting a $10 trillion market cap, such as Beth Kindig, the lead tech analyst at the IO Fund. At the present mark, investors pondering over a purchase could well seize the opportunity as Nvidia hovers around 20% down from its highs. Analysts predict a favorable climb, and the company's multifaceted strategy infuses confidence into its long-term plans. But what do you think? Is Nvidia's recent dip a golden investment opportunity, or does it signal a more cautious approach? Share your opinions on Nvidia's trajectory and how you perceive the AI giant's role in shaping our technological future. Invest wisely. The AI revolution awaits. This article aims to present Nvidia's market journey with a blend of professional insight and an engaging touch, hoping to resonate with seasoned investors and newcomers alike. While demonstrating Nvidia's potential, it maintains a perfect balance of informativeness and conversational allure. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.